Everyone wants to be right in the market, right? Right or wrong. But you know what? You got to be right finding out what the catalyst is in the market. We know what negative catalyst we had yesterday. Oracle, more funding problems, taking down NVIDIA, Broadcom, AI trades over. Wrong. Micron comes out after the close, blows it away, and gives a lift to almost the entire market. We got to examine that unbelievable report, the price implications, what it's going to do for the overall market. We'll cover some other earnings stocks. There's some ratings. There's a stock buyback. Trump's speech last night having some impact on the market. But we got another catalyst, 835. CPI, 830. Blue Putnam at 835. Folks, jam-packed show. Brentster shaking out the cobwebs from the trip from Egypt. No Brentster today. Let's get it started. Pre-market preps coming at you right now.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, traders and investors. Let's pop the trade station charts up here on the screen. Take a look at the S&P 500 index futures, up about 30 handles. You got a chance to buy yesterday's low last night, but buy the dippers, reign supreme. We'll see what happens at 8:30. The buck on the rebound here, quietly up 17 cents. TLT up 11 cents, 87.91. Crude, Venezuela not mentioned in the speech here. No follow through. Down 67 cents, 67.31. GLT taking a breather. That's down a couple bucks after making a new all-time high. 397.28. SLV down 34 cents. 59.92 in Bitcoin futures. They're just hanging out here, putting in a triple bottom here. 85K up $1,290. 87,255. These charts are brought to you by TradeStation. Chart, analyze, customize, all-in-one program. Thanks to our sponsors over there at TradeStation. Let's bring Triple D onto the stage here. Yep. And Catalyst, that is Catalyst in this market.
Catalyst, multiple catalysts for the rally this morning, and it is Micron for the save. Like, they came out and absolutely blew it away. We thought, it was going to beat in a raise. I had no idea it was going to be this kind of a raise. Like, let's just go to these numbers because these numbers are nothing short of incredible here. So the Q1, 478 versus 395. The sales, 13.64 billion versus 12.83 billion. So a huge beat on the top, a huge beat on the bottom. The guidance is unbelievable. Q2 GAAP EPS, they're seeing $7. Q2, just Q2. $7.99 to $8.39. This is versus a 488 estimate. So they're literally almost doubling their guidance. Like up 80% from where consensus estimates are. Remember, Micron is a cyclical business, and very much margins and everything depend on memory pricing. Memory pricing has been sky high and flying, and they see it going higher. They see margins increasing. So it's an unbelievable move, well warranted, because this is like the blowout of blowouts. Like, it's been a long time since I've seen a blowout like this. The question is, and you were asking it, Joel, is this an Oracle moment? Is this as good as it gets? Remember that show? Could this be as good as it gets, the movie? Is this as good as it gets? I don't know the answer to that question. But we know with Oracle, it was. Is Micron having its Oracle moment, or is it just getting started? I'll ask you.
Well, a couple things. The pension for people shorting stocks. I always, I hate you. There's always, you want to catch it. And somehow you traders in the STN room were able to catch this a couple times on the short side and brought it in. But then we started seeing this guidance and everything.
Yeah, on the call.
the call, and they just blew it away. And I think one thing that, I was kind of keeping in my back of my mind was, is it going to get to the expected move? And if it gets to the expected move, then what happens? So the expected move took it up to 245. And you could see it paused ever so slightly there. And then boom, it just picked up steam. I don't know if this is an Oracle moment. And the only reason is that everyone's spending money on AI, right?
Everyone.
They need
Everyone.
chips,
Mhm.
right? They got the chips. So there's
Yeah.
the demand. They're not going out there and building, trillions and billions of dollars to build data centers. They got the factories and they're doing it. So the demand is there. Will the demand stay there? Well, they think so. With that, wow, unbelievable guidance.
I mean, that's the question. Does the spending continue? Because we have had every company just spending to a point where Oracle has put themselves in a balance sheet issue. So, I mean, could the spending be an issue where it actually slows down a bit? Because then that wouldn't be good for Micron. But I mean, memory prices just through the roof, DRAM flying. This is a cyclical business again. I will say it. We see this cycle, it's obviously the kill earnings when DRAM pricing's high. They actually can go to losing money when DRAM pricing comes back in. Right now, DRAM pricing flying high. SanDisk, another memory stock, flying off the Micron earnings. Western Digital up here at $173 this morning. WDC flying as well. I mean, it's the question: is it the Oracle moment or not? And I don't know if any of us have the answer to it. So I want to hear what you have to say. I want to hear what you guys have to say as well. I mean, the AVGO too. Like we could talk about that. AVGO had a hell of a report here too, Joel, and went straight down for 5 days afterwards. I still feel like yesterday was like an ugly day for the markets. And maybe we should just stop and talk about yesterday, because I was kind of feeling like, oh, they're coming in and, they're looking like they are buying some of these beaten down Momo names. Oracle harpooned all of that. Also AVGO, because it kept going down too. But it literally came in and just harpooned the whole damn thing. So, and then they're worried about it. And NVIDIA had a horrible day, bringing down the S&P with it. AMD, horrible day, bringing down the S&P with it. I mean, now, so we get the snapback rally on the Micron. That is what has happened. We're just laying it out. We had the, horrible Oracle, AVGO bringing down the market, and then the snapback rally with Micron. Trump also saying some stuff last night that probably helped the market as well. The one comment, and I know, was like the Micro Machine guy. He was talking so fast. He was talking faster than me. He was talking like on 2 times speed. He was getting all of his information. He was talking so fast. I know, it was really fast. If you take anything out of that speech, though, the one thing that I took out of it was his comments on in the next Fed chair. And he said the next Fed chair is going to want interest rates a lot lower. That's the dove we're talking about. We know, the market knows that. He knows we're going to bring in a dove for the Fed chair, but he's saying it out loud. The next Fed chair is going to want interest rates a lot lower. Interest rates going a lot lower is good for stocks. So I think that's, why also the S&Ps, have lifted a bit this morning. So you can thank Micron and that comment from Trump for why we're lifting here this morning. Where do we go from here? This is $1 million question, because I don't know if anybody has the answer to this. It could roll over again. There is overhead supply. Also, you could get in a situation where, like, these, AI names are all beaten down. Look at the spending and look at what Micron's doing, and let's go buy some of these beaten down names. I think it could go either way, and I think it's a coin flip day. So it's going to be tricky, to make a call here and say, oh yeah, this rally continues. I could easily see it rolling over. I could also see one of these days where we chop around a lot, Joel, because you got, again, the battles between the bulls and the bears. The AI stocks are too cheap. They've come down so much. Some are down 30, 40, 50% from the highs. Let's go buy them. And then the other, side of the coin is it was a big AI bubble and it's burst and spending is going to start to come down. Micron, Oracle were peak cycle. I mean, that's the arguments. Nobody has the answer to that. If somebody doesn't know for certain, they don't know anything. Nobody knows.
And with CPI coming out at 8:30,
that's a wild card, but not so much for the AI stocks. They won't care as much. The 2 stories today. Micron, the AI stocks are doing their own thing. Then you have CPI on the value stocks. That's going to matter big time. Like, obviously for the IWM, obviously for the bond traders, obviously for, even the financials and Berk.B, which had a great day. Berk.B was up $4 yesterday. They're loving the financials. I mean, what they're loving Warren. So there's so much information coming at us. We will have Blue Putnam on right after 8:30, after the numbers break, to break down the CPI for us. But this is an economic data point that will move the market. It's going to chop around a lot on it, potentially. But I mean, this is, the data point that we've been waiting for. So let's see what it's all about.
Oh, and don't forget about Quad Witch tomorrow. Too.
And the rebalance. We got quarterly rebalance on the NDX and the S&P, I believe. So we're going to have some imbalanced trades tomorrow night, and we'll be doing those live in the STN room. But right now it's all about Micron. It's all about the AI spend, and Micron for one day makes the AI traders feel a little bit better.
Yeah, and I think just taking off your political glasses, your fundamental glasses, and just looking technically here, we lost the 50-day. We lost. Well, did we lose the 50-day? We're above it now. The 50-day moving average for the SPY is like right here, 74.83. So we know what happens when issues, stocks or commodities, or they lose their 50-day. Who knows? I mean, no one's thinking about the 200-day right now. No one's thinking about 621.51. Absolutely nobody. But we are, we're there. We're now. We have to prove that we can get back and make that solid support. If it turns into resistance, then, maybe Santa Claus just won't make it out of the North Pole. We did have a nice rally this morning. We got some earnings to cover. One other thing about the Trump speech, he did say that he's going to make healthcare better for everybody. And these insurance companies are making too much money, and he's going to come. So if Humana's not really affected by it, UNH, which just dead here, trying to get back above the 200 days.
Leaking.
So, yeah,
UNH leaking a little bit here as well.
Yep.
Yeah, trying to claw its way back, but it's struggling to get back. Also, no mention of Venezuela. So does that mean they're not going to war with Venezuela? No, probably just was flying out. It was kind of a what we've done for you, speech. Like he was saying how he brought down prices and we've got all this tariff revenue and we've done the greatest job in the history of every other president. It was kind of like what it was. It wasn't so much on where we're going. So there was no mention. I didn't hear a mention of crypto unless I missed it.
No.
There was no mention of Venezuela at all. But that doesn't mean that that's not happening. And I don't see, oil stocks are down slightly there. I think on the initial, when he ended the speech, oil did dip a little bit last night, Joe, right as he ended, because obviously didn't mention the war. And people were, Tucker Carlson had rumored and said that he was going to mention last night that they were officially going to war with Venezuela. None of that happened. So that's why a little bit down.
I'm gonna cancel him as a guest next week.
Carlson, yeah, because he got that wrong.
Yeah,
his insiders weren't in that much inside. So okay, so that was the Trump speech. Trumpster wasn't done though with just the speech. So we got DJT merger, and this one's a hard one to figure out, folks, because he's merging Trump Media DJT to merge with fusion company TAE in a $6 billion deal. The details here, TAE is a private company, so it gets a little bit tricky to figure out. But they are going to co-own this. So under the terms of the merger agreement, TAE, TMTG shareholders will each own approximately 50% of the combined company at closing. So Trump Media and TAE are going to own 50% each. But it's hard to value because it's a private company. Obviously power, we know we got power problems, they need more power. So Trump's and DJT getting involved in this. It's probably not a bad thing to have the power company, when you think about the regulation that goes into this, to have Trump behind you and his own company behind you. So it's probably not a bad thing. So does this become one of the players, in our need for power to run AI? Maybe. But again, from valuation perspective, it's almost impossible to value because of all this being a private company. So it's hard to get a feel for it. You can say, oh, it's a $6 billion deal. What does that mean? There's a lot of considerations here. So DJT, though, up 21%. We can always do a technical. The $10 level has been support of all supports for DJT. So if you're buying it off the 10 once again, you're making money. And if we just look back, 2021, when this thing was not a SPAC, it was 10. Then it went to 175. Then it came all the way back down to the 12, 13 area. Eventually went back up to 50. Then it came back in July of 2024 down to $11. Then went back up to 50. I mean, we've done this trip a few times. If you've just been buying off this 10, 11, 12 area, you've been making money a lot. Is it over this time? Is it not going back? Well, it's going off the board. It's going to be a power company. We saw what happened with NKLR, but Trump, is obviously behind this. So the Trump Corporation, that's going to help to a certain extent, but I'm probably hands off on this one. This one's a hard one to figure.
So DJT it's gonna go off the board and come back as this company. I mean,
I don't know on the details on that, Joel, if they're just going to go off the board, period, and this is going to trade privately, or if this is actually going to bring TAE on the board, so like onto the stock exchange. I'm trying to look. TMG intends to file SEC registration statement to be issued in connection with proposed transaction. I mean, I got to dig through this whole filing to see if somebody has the answer and has dug through it. I'm not gonna
we can't.
I read the entire filing. I read it for 5 minutes. So let us know if they are planning on bringing this onto the exchange. If you did read it.
I'll just give you the price action, and there was a real nice pop in here to 14.73, and you've leaked off that $2. So a lot of times when you see a pop on something and then it starts to leak it back, a little bit harder to get up there. So I would just look on some of your daily levels and see. I mean, 12 was a big number. Maybe you get a gap fill in this. That'd be a long way down at 1086. But I think the best way to put it is that it was a very well-timed speech. The market in the dumper a couple days, rah, rah, rah. We get the pom-poms out, talk lower interest rates, well-timed speech.
I think so.
Yep, that's what I would say.
Yeah, I could say it's well-timed as well, so I'll go with that. Lululemon.
Yeah.
This is probably if not Micron, this is the story of the day. We got Elliott. And I guess, now we can officially say that one, support until it's broken. That 160 was huge. Got back down there multiple times. We traded off of it once. Then I traded again. And then I was like, I don't know. I got nervous. It was hanging out too long. And I sold it and scratched it. And it ended up going up higher, obviously. And now you get Elliott involved. It looks official, like the Lululemon low is in. We've got news from Lululemon in itself as well. Here's one. So not only Elliott coming in as an activist investor, and that's why the stock is up so much. Lululemon also plans a franchise expansion into 6 different markets in 2026. So that's another catalyst here for the stock this morning. It's up 7%. It's a big move. I don't usually chase the Elliott moves, but it usually puts a floor under the stock. So usually, like you think about Pinterest and all the other ones they've been involved in, that once Elliott's in there, they usually kind of, that holds stock up to a certain extent. So I think on dips, Lululemon probably a buy. And also, you got the wild card here coming, Joel. If tariffs are, and again, they're ruling on this, if they've got to pay back the tariffs, or if they've got to get rid of the tariffs, the Supreme Court wins, or it's ruled by the Supreme Court and Trump loses on tariffs, this is great for Lululemon. I mean, they're getting dinged. Lululemon, I believe, makes the majority of their clothes in Vietnam. And obviously, they're getting tariffed, bringing these things in. If they don't have to get the tariffs, let's just look up percentage of Lulu clothes made where. That's a bad way to put it, but hopefully AI figures it out. Yeah, Vietnam, China, Cambodia, Sri Lanka. It's all there. And I think when I looked before, Lululemon is like 60% nom. So actually this is 32%, 15% China, 10% Sri Lanka. But you put all those together, 60%, is basically over there Asia or more. So if, if the Trump still loses on when the Supreme Court rules on tariffs, Lululemon's going to pop on that too.
Boy, oh boy. A comment, first of all, on Children's Place, going back to that, they're taking a huge hit for tariffs.
Yeah, there's another trade. Like you should almost have a tariff list, because when you get this ruling, if obviously Trump wins, these stocks all get dinged. If Trump loses, and maybe he's going to peel it, maybe he's going to go, these stocks probably pop back, because Children's Place has been in trouble Like the tariffs, they were blaming tariffs for this last quarter, the warning. And, obviously you can see the stock just destroyed. So Children's Place has its own problem. So it's just like, well, let's blame something. So let's blame tariffs. But Lululemon, Nike, you think about all those retailers make all their apparel in China. All those companies have the potential to pop up too, which sets us up well for Nike into tonight.
Yeah, real quick on the
Lululemon.
Like Nike I want to comment on the price action.
Yeah, Lulu for sure.
Big pop, 224.79 is your high. Historically, these big moves have been a good time to take short-term profits. Like if you just we're taking a flyer on like the 210 calls are going to be nice and juicy today. So keep an eye on that. Keep an eye on the pre-market high. If you're holding out for the 50-day, that's up at 229. But I would, keep an eye on the market. Also, it's a juice. It's a big pop. If you look at historically, people have sold in, took profits on this. Also, and correct me if I'm wrong, but I think Micron, if you want to see any negative in that report, I thought I saw that they weren't accounting for any kind of tariffs, any tariff exposure. I don't know what they have, but I thought I saw that when the conference call was going on. So if there's anything negative in that report, maybe it comes from that. But Lululemon just busting out here, consolidation, see if we could take out that pre-market high.
So, and this is sticking with the apparel theme here. We do have a few stocks reporting this morning, which we'll get to here in a second. We had BIRK, not Birk.B, but the shoemaker there, and it's getting dinged. Accenture, DRI, CTAS, KMX, FCEL. I just want to preview Nike here just before we go to those companies, though, because it's tied in with Lulu. Nike has been pulling back here. I feel like the bar is on the floor for Nike. I feel like it is so low, the bar here. And after we just saw the rally in Lululemon and Nike, valuation is still, it's funny. The valuation has never been really that cheap because the earnings have been coming down. So, I mean, that's really what's brought the price of the stock down, because it's trading 33 times earnings, Nike. And the reason for that is the earnings have come down so far. If they ever get back to peak cycle, if that Nike can get its mojo back, get the swoosh back, well, that would change things tremendously because they used to make a lot more money. So you get Nike here coming in, reporting tonight. The bar is really low. I'm going to give you the expected move. Unless you have it, Joel, I can give it to you right now. The expected move for Nike is about just over $5. Just over $5. So that would bring us up to like 71, on that lower end 61. Lots of support down there at 60, 61. I feel like it's a really low bar here for Nike.
You know what? Nike is just like, when you think of Nike, like when it was making those, those big moves, it was like a big athlete, like, Bo Knows and yeah. And
Tiger.
Yeah. And Tiger. And now you look at it. I mean, LeBron's getting old. I mean, he's still great. Ronaldo is very famous around the world, but, not so much in that. Serena Williams is retired. Caitlin Clark, I mean, women's basketball is fun to watch, but I just don't think. Good old Kate Cunningham from the Pistons, but there's no Tiger Woods. There's no Michael Jordan.
No.
And then the NBA players they have now, Kevin Durant,
but even if they got those, there's just like kids are wearing different stuff now.
Yeah.
Like they're not even worried about brands. Brands aren't as cool as they used to be. Like they're wearing all kinds of different stuff. On holdings, though, it's been a competitor here, obviously. NON is lifting a little bit, and they're coming back here as well. So, there is just competition for Nike. They're not running the show anymore. And I don't know if they ever get the mojo back. I don't know if they ever get the swoosh going again. It's a hard thing to say. But what I will say is, into this quarter, the bar is very low. If they say anything okay, stock could pop. And then the tariff whole argument I just gave for Lulu applies to Nike as well. So if Supreme Court rules against Trump on the tariffs and have to pay it back, it's going to be good news for Nike as well. But, there's the tariff concerns too into this. Like place warned, maybe Nike comes in and warns about tariffs too. Maybe they get below that lower bar. There's a lot of wild cards here, but the bar is low for Nike. If they say anything okay, hit the earnings numbers, you could see Nike having a pop.
Yeah, big seller on the open yesterday. I know that caught you a little bit off guard because you were long going into it. You were able to sell, bought the open, doing some quick flipping here. So
We've been
someone,
trading this ahead of the report, and it's been working really well. And it worked again here this morning. If you had Nike overnight, it's up 0.78%, so well more than the S&P. So it's been working really well, the trade ahead of the report. Not holding it the whole time, but it's been up every night. And like, I don't trade intraday. I'm an overnight trader, so I buy at the close and sell after hours. She pops up or at the open the next morning. And it's been working really well. We've had 3 or 4 days of success on that one in a row. Yesterday was actually, I snuck out in the pre-market, and the thing opened really weak, and then I bought it in the pre-market and opened low and then popped up for us too. So it was another good trade, Nike. So typically, that's one of my core strategies, owning stocks ahead of reports. Owning stocks in the reports, I only do when I got a really good feel. Like I did the Netflix on the Tyson fight, because I was like, it's going to be an awesome number. Probably should have done Micron last night, knowing that I said they're going to probably beat and raise, but I thought they were going to beat, raise, pop, and then drop.
you did go Nike. You went into it. You went out ahead of the report. You went out into it, and you're like, uh-oh.
Yeah.
There was some strong buy. I mean, it moved. It
pulled back in though.
Yeah, it did. It actually, Mike Franz caught it and like on that pullback because his Christmas tree fell down. He ended up like covering the short at 232. I don't know how the hell he did that.
That's at the low of the pullback.
After
so she did have some dips in there. So let's go to the BIRK earnings quickly.
Quickly.
Birkenstock reports, they're not good. Love the shoes. I have multiple.
I don't like the shoes.
I love them. I mean, you got to like work them in. So the earnings were actually decent here. The guidance is a little bit light, so that's the problem. The earnings were 60 cents versus 40 cents. Also 615 million versus 606 million. That's a beat on the top. That's a beat on the bottom. But then 2026 EPS are seeing 222 to 240. Analyst estimate were 230, so that's kind of just in line. Then the sales guidance, they're up at 2.75, and they see 2.68 to 2.74. So that's slightly lower. You can't slightly lower guidance in this market. They hit you, and it's down 12%. I mean, there is support down here at 40. If you're short, maybe you're bringing it in at this point in time. But, maybe you can get a bounce there because there is some support from 38 to 40. But the guidance was light.
I would just keep an eye. That 40 looks good to me. This is probably over the expected move. I would just say, keep an eye in the 40 to 42 range here. Good support, multiple lows just above 40. You did have a base forming at 42. That's the 200-day average. So if you just want to play it safe, maybe just wait for it to establish a bid over the $42 level, 200-day moving average. Okay, the November CPI report is expected to show that both headline and core inflation remain high, with many economists projecting a 3% annual rate for both measures. We'll be getting this data just momentarily in about a minute and a half. Headline CPI year over year to be around 3 to 3.1. Core CPI 3 to 3.1. You have PCE tomorrow as well. Quad Witch tomorrow. A lot of different factors going on, but we're going to gear up here. I'm going to gear up for the price action here in the S&Ps, and we are going to wait for that to come across the tape. We'll even go to the 1-minute chart for Brent, even though he's not here yet. A lot of air on the upside, folks. We came down hard yesterday, so a rip is a rip is a rip, but you got a long ways. I mean, first stopping point, we had a low at 68.17, but very little in there because they pounded this thing and they didn't bounce. Coming back on the downside, if you're a buy the dipper, call it a potential double bottom between Tuesday and Wednesday's low. Algo
the number matters because we don't know what Powell. We know interest rates going down. The next Fed chair is going to be lowering rates. But this number matters to Powell, and Powell is still in here in the first quarter, the first part of 2026. So the number matters. If it's hot, they're going to hit the IWM. They're going to hit the XBI. They're going to hit the TLT. So let's keep an eye. TLT. S&Ps, remember, having tech in there too.
Everything.
It's not going to be as sensitive here. But here we go. 5 seconds. Let's go.
Man, we didn't even get some algo.
We're moving up.
Light. I'd have to say it's light here, maybe under 3.0. We're ripping. I told there wasn't much resistance in here. We're ripping. We're going. Let's see it. How light is it here? CPI data weekly, also jobless claims, Philadelphia managing survey coming out as
Hopping
well.
around a lot.
Nice pop. Nice pop. Waiting for those official numbers.
Seriously, they were slow here hitting the board.
Where the hell are
really
they?
slow hitting the board.
Man, we got to pay for that extra
There it is,
special
finally. 2.6% versus 3%. Flat out light. Flat out light on November. Jobless claims were in line at 224,000 versus 224,000. So that we are light on the CPI. That should be green light go for like IWM, and you can see it ripping here right now. Look at the IWM up 1% here. TLT also moving up slightly. Bonds have just been a mess though. But definitely light number here.
Yep,
that's
that
a
double
light
catalyst. Yep, that's what this no dip at all. At all. We were trading at 09.
No doubter on that one.
Yep, it was no doubter. Now the Bulls got a little bit more fodder here. We're climbing up. We'll see where the pre-market levels settle. IWM getting a nice boost off this. So I guess maybe for your stocks, take a look at your lows on Tuesday as potential resistance, and then your closes on Tuesday would even be a better number. We are waiting for our boy Blue to come on here.
We'll get Blue's analysis here in a few minutes. He's coming on at 8:35, so we're a couple minutes there. Just quick look here. So quickly, Joel, bring up the IWM again because it's more sensitive and it is ripping and at the highs of the session here, not slowing down whatsoever. So you can see right on that number. S&Ps are muted because, again, S&Ps are well diversified, a lot of different stuff in there. It's not going to affect tech quite as much as those sensitive IWM. Also, XBI, which was down last night because of INSM. INSM's 2% of it has now went green as well. So XBI was getting hit last night because INSM being 2%, the index being down 15%, knocks that down 0.3%. That's shrugging off now. And XBI, obviously interest rate sensitive as well, moving up here on the light CPI. Does this give Powell a reason to cut early in 2026? We will ask Blue that question when he gets in here.
Yeah. I just for you, INSM, we can go in after with Blue, but I got a great number for you IWM traders. Exact double top at
Can you show the chart?
252.16. Right here. I'm going to make this one a little bit bigger.
We're seeing IWM still.
Yep. IWM. I'm looking.
I'm giving IWM technicals.
Yep. Double top from Tuesday and Wednesday, 252.16. Very important to get up to that level.
Yeah, big number here.
Current high is 250. Micron, just this is not going to affect. Micron has its own catalyst today. TLT, that's still that chart is just doesn't
not moving.
It doesn't rhyme.
It doesn't rally, and there's something happening here with long-term rates. Blue is here. We're going to bring on Blue here. We're going to run our intro because he's ready to rock and give us analysis on that breaking CPI number here. Want me to run it or you want to run it, Joel?
You're man.
I'm not. Brad's doing so much better, but here we go. We both ran at the same time. Let me run it.
There is Blue Putnam joining us. So the government shuts down for a couple months or whatever it was, and so you get some time off. From PMP? What did you do during your time off?
I wrote about longer-term research projects. I did a little gardening.
Are you in the garden right now, or are you getting some construction done in your house?
Oh, I'm sorry. I'm in my future office. I'm in the construction zone.
That's funny.
I usually blur that. I don't know why it didn't blur today.
Okay, so what do you got for us? I know you got some initial thoughts on this very light number.
Yeah, I think we're all going to have to take these numbers pretty carefully just because of the delays and everything. But this one keeps the Fed on track. They can cut some more.
You think
Yeah.
Powell does cut more? Like he's obviously, already cut. What have we had? Two? Have we three cuts? We didn't get
We
third.
had three
third
cuts.
Yeah.
We had
Is he
three
three
cuts.
and done, or does this number give him like, okay, let's go again?
It doesn't give him let's go again, but it makes for, I had thought that January was going to be a pause month. And
Okay.
it's possible that maybe we move that, maybe we take the next cut a little sooner. I still think January is probably a pause, and that's just because everybody's so divided. Um, some of the Fed presidents are a little more hawkish, and by that I mean they don't want to cut, they don't want to raise. And then you have Steve Mirren, who, let's do 2 or 3 cuts like President Trump wants. So they're very divided, and having cut 3 times, September, October, December, January would be a good time to pause, but we'll have a lot more data by then. We'll get another CPI, we'll get a core inflation, and we'll get a jobs number. So we can kind of look through all this delayed, confusing data.
I mean, it came in a lot lower. I mean, a lot lower than expectations. I mean, 2.6 versus 3.0. I mean, and
That's
it,
a big.
yeah, also, I mean, it skips the October numbers, right? So we don't know how much a factor that's going to be. But if you think about it, I mean, where was crude when these numbers were taken too? And that's a big component as well. Besides January, let's just overall, what are you looking for cuts? I mean, I know we're going to have the change in the Fed and stuff. I mean, I've seen 2, I've seen 3, 4. What's your outlook? I mean, the unemployment number, we did add some jobs, but it did pump up to 4.6%.
Yeah, and if you took the payroll data for the jobs for October and November and averaged them, it was a negative number. And we think the benchmark revisions that'll come early next year will kind of bring it all down a little bit more. So I feel like the U.S. economy is pretty sluggish. I think that the FOMC members weight the jobs market more than they do the inflation. And of course, now they don't have to worry as much about inflation, at least until they get the next number. To me, the neutral rate is probably close to 3%. So that's a couple more cuts. But if the unemployment rate were to get toward 5 or above 5, they might go a little lower.
And then one last thing for me. Could it just be like people are hurting and they don't have the money and they're not going out and spending as much?
It's not so much that people are hurting, is that people are seriously unhappy. I know that's a strange concept for an economist. We're supposed to be data-based, but we're not losing jobs, but it's the economy. It's harder to hire. We are laying some off. We're kind of just cruising at a very stable but not great place. It's pretty sluggish. And then you've got so much change. I mean, AI is artificial intelligence. It's happening. Companies are either using it as an excuse to cut jobs, or they're actually using it for real to cut jobs. But they're not adding jobs. The jobs that are going to get added, building a data center, that's a totally different skill set than running an AI system. And then the tariffs are still very uncertain. People are paying for, holiday gifts and everything. 80% of the toys come from China. They've got tariffs on them.
Yeah.
So I think it's the weight of all the uncertainty and all the change has, I'm a sailor. And if I'm sailing into a foggy situation, I put somebody on the bow and I slow down. And I think that's...
Don't hit the iceberg?
You do not want to hit... Well, I only sail in warm water. There's no chance. I'm on the Chesapeake Bay. But anyway, I think a lot of people are just dealing with massive uncertainty, a lot of change in their lives. And it's not that they're hurting so much as that they don't know where they want to go and where they can go.
Right. What what do you think? Bring us back to the jobs that you were just talking about and you were hinting at it here, Blue. And, we've talked about this, scenario, and I want to get your thoughts here because, I don't know where AI takes jobs. I think you're right with your analysis. I don't think we're going to get more jobs because of it. And there's definitely going to be some jobs lost because of it. The AI tech guys will say, well, there'll be other newer jobs that will replace the jobs that AI is taking away. But, we hear people, like the one CEO from the one company saying, well, I bought ChatGPT for $29 a month and fired 32 people. I let 32 people go basically because I got the ChatGPT doing their job. I mean, is there a scenario here where jobs actually could really get dinged from AI?
I don't think so if you give me a decade. But if you give me only a year, I think we are going to go through a kind of a negative transition phase. And that's because the new things that AI can do, we don't know all the things it can do.
Yeah.
And so I think how to use this technology to create new jobs is something that'll take many, many years to see where it's going. But the short run, it's not good if you're an entry-level coder. Oh man, I don't know if you've used any of the coding software, but it is really impressive. And if you're writing pretty simple reports, you need a senior person because AI still hallucinates, but it can still do the basic routine stuff to get started. I think the companies that succeed the most are going to be thinking more about what I would call augmented intelligence rather than artificial. And if you put a senior person with a good AI team, you're going to get a lot more productivity. But that's not so good for college grads. It puts us through a tough period.
Well, there's also the argument too. I mean, a lot of people, saying, "Oh, it's gonna, you're gonna see more blue collar with robotics, those jobs getting lost." But you're gonna see educated jobs lost here too. I think about being an English major here, where you're writing, or you're, a business communications person or something, like ChatGPT comes in and writes this stuff up for you, there's gonna be some educated jobs lost here as well.
There will be some, but I actually, it's an interesting point you make there. I actually think a liberal arts education may rise to the fore here because specific skill, if you have a highly specific skill like coding or something, that can be disrupted. But if you're able to think about the problem, frame the question, and design the strategy, then you're going to be in demand. And I think that's a multidisciplinary kind of approach. So business schools, I think, are going to have some serious adaptation to go through. We'll see how that works out. But education is going to change. I mean, memorizing facts just doesn't help at all now. You got to really learn how to think. And way too often, we were in the memory business. Certainly, if you take some of the CFA exams, you better have a great memory or you're going to fail. And that's not going to be the most important thing.
All right. So just looking at, I know you do like to look at the market and you look at the market primarily through the S&P futures options. And I'm never asking you to make market calls in here and stuff, but we called the show the other day, Chicken Little, like the sky was falling, but we were just right up at old time highs, what's there to worry about? They're always buying something. I've heard you talk about the skew in the S&P futures options. Are people out there grabbing protection and going, buying those cheap puts, or are they saying 7,000 is coming? It's coming with Santa Claus. Just everything doesn't get any better than this.
Well, let's see. We've got a lot going on there. I don't think you have deep recessions without banking failures. And we are nowhere near any of that. We have a very well-capitalized banking system. It's fine. Different companies. So if we have a slowdown, it's not going to be all that bad. More like 1999, 2001, nothing like 2008, nothing like 2000, like 1998, whatever. None of that stuff. It's not going to be so bad. So we have a wall of worry. We're climbing. But the worries are not the end of the world here. Like we don't understand the tariff regime, but we've come through this pretty well, way better than people like me thought we would. I definitely wasn't getting it right back in February before it happened. But corporations have done a way better job of managing it, and it hasn't hit the economy as hard. We're not going to get in the U.S., any real changes in tax policy. The healthcare system is a big political issue, but it's not going to hit you on day one. It's going to evolve more slowly. So we have all these worries, but none of them are cataclysmic. And so we're able to climb these wall of worries fairly well. And lower interest rates, by the way, I don't think lower interest rates are going to help the economy at all. They have nothing. They're not going to affect the progress of AI. They're not going to affect, it's just not going to make much difference. But for the stock market, it's huge because the tech companies have so much of their earnings way out in the future. And if they're way out in the future, you need a bond yield to discount them. And so if we get a little lower interest rates, that's another rally in equities that can offset all these other little worries.
Is the yen carry trade keeping you up at night?
No, it doesn't keep me. If you're short the yen, you probably should stay awake. I think people are way more diversified on the carry trade. I think that story's overdone. There was a period there where when the yen rallied that it took out the carry trade people, but I don't see that as a big risk going forward. I know some people do, but I don't see it.
Okay, and just overall, comments on the buck. Good for some companies, bad for other companies here. You did have a nice rally. You've pulled back here. Just a non-factor here. Got up to par, pulled back. What's your outlook for the buck and its impact on U.S. equities?
I think the buck is going to be a hot topic of conversation in February, March, and April. We are going to talk about it, and it's all going to be about Federal Reserve independence, not about where interest rates go so much, but how the new chairman of the Fed views the institution. And, you have a fairly diverse group, even among the folks that are potentially appointees from President Trump. You have the two Kevins, and you have Steve Mirren and others. Some of those people would put the Fed right under the Treasury right away, but not the two Kevins. They are a little bit more into the culture of the Fed, which means that they may not get the job. So we'll see. But I believe that if we threaten the independence of the Fed, that's going to be a down 10 to 15, 20% on the US dollar. It could be huge. But right now, the two people at the top of President Trump's list do appear to understand Fed culture and would not challenge it enough that bearish view on the dollar would come about. So we're just going to have to wait and see. It's going to be huge.
I hear you're on the short list.
Oh, yeah, right. I'm on nobody's list. I can tell you that.
You're on our list, Blue.
Preps list.
You're on the PreMarket Prep list.
You're an economist. You are the chief economist at PreMarket Prep, giving us a great overview, been following inflation with you for just a long time. And, everyone gets things right and wrong sometimes, right? That's what the market's all about. Blue Putnam, former chief economist at the CME, chief economist for PreMarket Prep. Always a pleasure, Blue. We're going to dial you up. I don't know. Happy New Year. We're going to dial you up.
Happy New Year.
Yeah, some January numbers. Thanks, Blue.
All right. Thanks, guys.
Thanks, Blue. You know what I find amazing is the inverse correlation with Berk.B and this market here. You got banks flying. Goldman Sachs going up, Wells Fargo going up, JP Morgan going up, the IWM going up. Like core holdings of Warren Buffett would be American Express, like he owns still a big chunk of Apple. All these stocks are green. Yet, when the S&P start rallying on this number, they hit Berk.B down. It is completely disconnected from its holdings now. It is all just about inverse correlation. And this is like recent in the last couple of months, but just seen as defensive, de-risking, because they got 40% cash. They're like, ooh, his cash isn't doing so good today. But I mean, you still got 60% stocks. Those are all going to be higher. I can guarantee you the NAV of Berk.B with all its private companies and Geico and everything else that's in there is going up today. Yet, the market says no, Berk.B goes down when the market goes up. So right on that number, when we get IWM ripping higher, you see Berk.B straight down in the 830 number. Is that not crazy, really, when you stop and think about it, though?
You had a major streak in that thing for a while when it was trending, and you just, and I ask you about it a lot, and you're like, maybe if there's a big imbalance, you'll trade it, but like you like as far as the overnight feel. But I guess this, I think that trend was probably like at the beginning of the year when the thing
I've been trading it. It's probably one of my most traded stocks. I'm trading it inversely correlated. I'm doing it too. I'm trading it inversely correlated with market, which is crazy because it doesn't make any fundamental sense, but you can't argue with what's happening with the tape. I mean, look at, yesterday. Market's getting hammered. Berk goes up $4. Market's rallying like crazy today. Berk going down. They own stocks. They own a lot of stocks. That's where it's at. But it actually, right there, Johan's saying it makes no sense, but it's very consistent. It is. And you know what? Just the algos are programmed to do it that way. Go with them. No sense fighting it. If the market's rolling over, Berk.B is probably going higher. If the market's ripping, Berk.B is probably going lower. Will that disconnect? Absolutely, at some point in time it will. But right now, in the last 3 months, Berk.B is seen as a defensive stock that moves opposite the S&P.
Have you ever traded the big Berk?
What's that?
Have you ever traded Brick A?
No, I don't even like bringing it on my screen in case I like have a slip up or a fat finger or something like that. I don't even like bringing it on my screen. I haven't looked at it in a long time. $756,000 a share. No, and there used to be traders in our office that did the Berk A versus Berk B, and you used to be able to convert them. Remember, 30-1 you could do it, and then they split the Berk.B, so that doesn't make any sense anymore. But there's some traders that actually used to do the risk arb on that. Like, not the arb, there's a share class arbitrage on that. I was always scared to trade it. It was so illiquid, still illiquid.
Yeah, Gabe Fabes says, so do you buy the Berk? He's not buying the Berk when the market rises for some reason because it's had an inverse correlation as of late. So I don't know. It's interesting. I will tell you, I did know one trader that during the financial crisis, he traded that spread, Brick A and Brick B, and he had a 7-figure trade off it. There was a one open where he got the spread on.
A nice trade.
Yeah. I mean, it could have went the other way too, but some of those efficiencies we had during the
back in the day, I was an inefficiency trader. I was like your high frequency trader. I was telling the room, on Viacom, I used to do share class arbitrage in Viacom, VIA versus VIA.B. And I traded 5% of the volume on Viacom every single day myself. So there was, lots of opportunities, to just be like a high frequency trader doing, algorithmic systems and taking advantage of, the spread. But HFTs evolved, co-location, with obviously payment for order flow and everything. And they pressed human beings out of that game. Humans can't do it I mean, you can try to do it if you want, but there's a lag there. You're not going to beat the HFTs at it. So flat out arbitrage trades, that's reserved for high frequency traders. We leave that for the GOAT, Kenny. Kenny's got all that now.
Easy for
earnings. They wanted to cover KMX. I forget who it was in the chat, but we will cover KMX here. CarMax, which had been rallying back a little bit here in the last 2 months after being absolutely destroyed, is now getting destroyed here once again this morning. The earnings were okay. Looking like unadjusted, 51 cents versus 38, 5.79 billion versus 5.67 billion, but they're lowering their margin, the retail used unit margins in Q4. So they're saying the margins are going to tighten up. And I don't like hearing anything like that. So that's why KMX is getting dinged here this morning. It's down 10%. This is a tough one in the middle of nowhere. I'm going to throw it to our technical analyst, Joel Elconin, because I'm out on this one.
Increased marketing spend. Expect to spend more on marketing as a total base unit to be up year over year in the fourth quarter. So they're having to spend more to make what they're making. Oh man, it is a tough call. If you were your gap fill trader, at least for one gap, you got lucky. You wiggled out at 41.30. It filled that gap kind of nicely. Now here under how big was this move? This move was from 30 to this 42.12, 36, coming back halfway back. If people, felt like they missed a good trade in this one, I expect buyers to step up at the $36 area, couple lows in that area, 35.91, 34.71. So the Bulls need to defend 36.
You wonder Carvana too. Chat saying Carvana eating some lunch here. They very well could be. I mean, Carvana has just been a monster. Obviously, Eric Jackson had the call of the century on this one, which made him, Eric, back in 2023, talk about Carvana being a huge buy in like the $10 area. It's $452. What a call by Eric Jackson. Just continues to break out, make new highs, comeback story of forever, maybe. There's not very often you would see a stock like Carvana go from $376 down to $3 and then come all the way back to $446. Like, it's rare to ever see that. That's an incredible story. Carvana.
Do you know what?
Been an incredible story.
You know who also made a great call on this? And I know he got out too early, but I don't know. I hope I don't offend anybody with this, but it's the Kardashian bottom here, right? You got the left cheek, you got the right cheek.
Oh, come on.
That's from Kenny. He goes, once you clear that right cheek, man, you got to get out of the way. So
that's funny.
Shout out
Kenny.
to Kenny.
Makes great calls too. We haven't had Kenny in a while. Get Kenny.
He was on when you were gone.
Oh, was he?
Yeah, when you guys left me to work 2 days all by myself.
Kenny working with you. We love Kenny. Kenny Glick, we're talking. Hit the bed. Awesome guest. So much fun and makes fantastic market calls. That's a great combination.
3 minutes left. And
DRI, Darden, Olive Garden. Best thing they did was lose Red Lobster, I guess, because the stock has continued to just grind its way farther north and continues to put out pretty darn good quarters. I know last quarter was a little bit of a dumper because it went down 10, $20. But, it's back. It's on its way back. It's kind of in a gap area. The earnings for 208 versus 210, which actually was a mess. 3.1 billion versus 3.07 billion, just a slight beat. But then they reaffirmed 2026 guidance, like a 1050 to 1070 sales guidance. They reaffirm as well. They say, they're looking. I'm just reading here. Consideration. Anyways, they reaffirm guidance, which I guess is good enough in this market. DRI moving higher here, 3% dividend. Everybody's eating at Olive Garden.
Yeah, the breadsticks.
I love the breadsticks. I haven't been to Olive Garden in a long time. They actually used to be in Canada, and I think that they closed all the Olive Gardens up in Canada. I don't think there's any left. If anybody can verify, maybe there's one in Toronto or something. But I don't think they're.
I've seen this trick before with Darden. I've seen it in other stocks where it teases you with the 200-day. And and then it gets and I think there may be some algorithmic traders out there, which I hope to be when I grow up, that just in a beaten down stock, I think they just accumulated the 200-day and they don't care if it ever goes back to the all-time high, and they dump it at the 50-day. I think that's a strategy that you could probably program and back test. I'll be doing it on Chat GPI later. But it's tough, man. That Chat GPI, they throw you stuff at you. You put something in, and then you got to ask them about the question, their answer to your question. It's really,
it's not perfected yet at all. Let's say that much. Joel, so I want to do some Bitcoin coverage here. We do have Hive blockchain up there. You can read the Hive if you want right now. At obviously our sponsor Frank Holmes over at Hive Digital, just killing it as always. When he comes on, I love Frank Holmes' commentary. But Read us that, and
This
then I
show
want to do some
is
Bitcoin
brought to you
talk.
by Hive Digital Technologies, a global leader in green-powered data centers for Bitcoin mining, high-performance computing, and AI. Operating with nearly half a gigawatt of renewable energy, Hive is on track to capture 3% of the world's Bitcoin production by the end of 2025. Scan the QR code on screen or visit the link in the description to learn more. You talk about the 200 day, that's where it is.
Become Bitcoin traders because we keep laying out this trade for the Bitcoiners in the STN room, and we're 3 for 3, I think, now here on the Bitcoin level, on the same level. So we've been talking about the IBIT, and it put in that low of 46.68. And the day that it dipped down to 47.55, we were at 48. Me and you both said, look, you got a low to lean on. If you want to take a shot, you can, say, hey, I think IBIT low 46.68 is in. And, you could do some buying here. Well, some of the people in the chat did, and it went up to 52, 53, 50, about $53. It dipped back down again, and we just said it the other day. It ripped back up, and now it's dipped back down again, and now it's doing it again. So I just outlined this yesterday. I was like, you know what? The same level applies. I mean, we're right here. We got key support. The low of the move is 46.68. That's your stop out. But if you want to do some buying at $48, $49, if she pops back, that's, you got defined risk there. Well, lo and behold, here it is again, IBIT popping back. So the level of all levels down here, you can do Bitcoin, obviously, just following the IBIT. I do IBIT because it's fairly liquid, straight 3 million shares, and it's an easier way to trade rather than going to the Bitcoin futures. But if you want to just trade off Bitcoin as well, you can do it that way too. But here we are, popping 4%. I do believe, like the market rally here, obviously the jobs number, or the CPI number helps as well, because if interest rates start going lower, that's a good thing for Bitcoin, because Bitcoin doesn't have any yield. So you're always competing. When interest rates are 4 or 5, 6, 7%, it's like, why am I buying Bitcoin? I get 6, 7% of, like in a treasury. So not the treasury's got that high, but it competes. So as interest rates go down, interest rates projected to go down, it is good for Bitcoin because it doesn't have a yield and it's a risk asset.
Bitcoin getting a nice pop, up $3,300 today. And boy, if you were looking at the Bitcoin futures, you had a clean setup here. Not 1, not 2, not 3, but 4 lows in the 85,000 handle, right? So, and it's nice. It's building a base above that. Still below the 50, still below the 200 day. I think things get interesting when you could clear at 95K in Bitcoin. Dennis, we're running a little bit overtime. You want to do your favorite rating of the day, and then we can pick up with all the material.
Well, my favorite rating of the day is going to be Rivian, because I recently bought this stock in the long-term portfolio, and I love the trucks, and that valuation's starting to, well, it's hard because they don't make money. But I mean, at a certain point in time, you're looking at this, and they're trying to do their full self-drive as well. They're going to work with LiDAR. Barrett upgrading Rivian here this morning, RIVN. They're raising the price target from 14 to 25. And I feel like 2026 could be a really good year for Rivian. So, obviously if the stock market rolls over, it's going to, get dinged. But if you think stocks are going to hold up, I think Rivian could have a year. I think it's a sneaky FSD play as well. So analyst commentary from Baird. We're upgrading Rivian to outperform as we move into 2026, which is the year of the R2 launch. We expect this to be a boost for Rivian's brand, product demand, and thus by extension the stock as deliveries begin near mid-year. Recent autonomy and AI day, which is what I was talking about, which got me interested, highlighted the unveiling of custom chips and a more thorough overview of Rivian's autonomous strategy, which we view positively for long-term competitiveness. We want to own into the new product cycle of launching in the R2. So they are bullish, raising their price target up to 25. I'm with you. I like Rivian here too. I feel like, Mish was all over this. So we give a shout out to Mish Schneider, because she was all over this at $12, $13. I'm a little late to the party because I'm coming in at 18. But I feel like 2026 is going to be the year where Rivian, I drove a truck recently in Las Vegas when I was there, phenomenal. I couldn't believe the horsepower. It's like, and I couldn't believe, the performance of that truck. So I was really impressed. And the truck is slick looking. Like, you think about the Cybertruck compared to the Rivian truck.
Lord.
It is so slick.
Boy.
So I like the idea of Rivian here. It's just, obviously, these EV players, you never know. So, you go in here, it's not a spec, but it's not a blue chip either. So it's a call. And I think Rivian could. I'm with you, Barrett. I think Rivian could have a decent 2026.
Ran into market to Jim yesterday, who switched from Ford to Rivian, the supplier, and he said that I said, "Hey, Mark, you want to come on the show?" He goes, "Oh, I don't really do that, but I could talk to somebody in media relations." So,
Nice.
gonna try and get someone on. Folks, are going to wrap it up on this Thursday. One more day. We're going to get the Brentster out of bed. He's going to shake the cobwebs out. But tomorrow, quad witch, triple witch, whatever you want to call it, 3.5 witch, we will be bringing on none other than CC Legator to cover that
Nice.
expiration. Folks, be safe and treat each other with respect. Back with you tomorrow.